This is Catherine Morgan-Nance. Welcome back to part 2 of our review of activity-based costing. In part 1, we reviewed ABC concepts and terminology. In this presentation, we walk step by step through an example and discuss the implications of implementing ABC. Before proceeding, make sure you are comfortable with the terms defined in our ABC Part 1 video. We are about ready to start using them. Companies follow 6 steps to assign cost to products using activity-based costing. After management identifies activities, cost pools, and activity measures, they calculate activity rates for each cost pool. First, for each of the activity cost pools identified, total overhead costs are estimated. These costs are usually developed during the company's annual budgeting process. Second, the quantity of activity to be used within each pool during the period is estimated. Third, the activity rate for each activity pool is calculated. An activity is calculated just like a predetermined overhead rate. We divide estimated total overhead costs for the pool by estimated total activity for the pool. But wait, we're not done yet. All we've done is calculate activity rates. Now we have to allocate overhead to products using that rate. Once management has calculated activity rates for each pool, it assigns costs to products and determines the total per unit cost for each product. In the fourth step, using the activity rates and measures determined previously, overhead costs are allocated to each product that uses the overhead pool. Fifth, overhead per unit is calculated by adding together all of the overhead costs allocated to a product and dividing the total dollar amount by the number of units to be produced. And sixth, we calculate total unit costs by adding together per unit cost for direct labor, direct materials, and manufacturing overhead. Once the period starts, actual costs will be assigned to cost pools, and product costs will flow in a similar manner to that used in job costing environments. Let's look at an example next. Comco Technology, Inc. makes 2 products, GPS systems and phone systems. Phone systems require more handling because they are produced in small batches compared to GPS systems. Recently, the company has been losing bids to supply GPS systems to lower-priced competitors. The company has been winning all bids to supply phone system, and management wants to understand whether its costs are accurate. Are GPS systems really costing so much to make, for example? So here's some additional information. In the current year, Comco has budgeted sales of 50,000 phone systems and 200,000 GPS systems. Comco's traditional cost system applies manufacturing overhead to products based on direct labor hours. Both products require 2 direct labor hours to complete. The phone systems and GPS systems consume 100,000 and 400,000 direct labor hours, respectively, for a total of 500,000 direct labor hours. We will assume that materials cost $90 per unit for the phone systems and $50 per unit for the GPS systems. Labor costs $10 per labor hour, and each system takes 2 direct labor hours. Therefore, labor costs $20 per unit for both the phone and the GPS systems. Recall that Comco previously estimated it would use 500,000 direct labor hours to make its products. Total manufacturing overhead costs for the current year are estimated to be $10 million. So using a traditional predetermined overhead rate based on direct labor hours, we divide $10 million of estimated overhead by 500,000 estimated direct labor hours to yield a predetermined overhead rate of $20 per direct labor hour. This is the number you'd consider to be a plant-wide overhead rate. Since each product requires 2 hours of direct labor, $40 of overhead is assigned to each product. Using the information provided so far, the unit product cost of each product would be computed computed by adding the cost of direct materials, direct labor, and manufacturing overhead, and would total $150 for phone systems and $110 for GPS systems. Next, let's assume Comco decides to evaluate its product costs using activity-based costing. We'll develop rates and costs, then compare the results to the traditional product costs we just discussed. The ABC project team at Comco has identified 6 activity cost pools and activity measures. It also divides the $10 million of overhead between the different activity cost pools. For example, there is a labor-related cost pool based on the activity measure of direct labor hours. This cost pool incurs cost of $800,000 and will use a total of 500,000 direct labor hours. You remember that number, right? Other pools include a machine-related cost pool based on the activity measure of machine hours, a machine setups cost pool based on the activity measure of number of setups, a production orders cost pool based on the activity measure of number of orders, a parts administration cost pool based on activity measure of part types, and a general factory cost pool based on the activity measure of machine hours. We calculate an activity rate for each of the 6 activities by dividing the estimated overhead cost for an activity by the total expected activity. For example, the activity rate for production orders is $3,150,000 of overhead divided by 1,200 orders, resulting in an activity rate of $2,625 per order. Likewise, the activity rate for machine setups is $1.6 million of overhead divided by 4,000 machine setups, yielding a rate of $400 per machine setup. Let's see how product costs are computed using these activity rates and measures. We'll look at the phone systems first. We assign overhead to each product by multiplying individual activity rates just computed by the expected number of activities used by the phone systems. For example, phone systems will use 3,000 of the 4,000 machine setups. We multiply the 3,000 expected machine setups by the activity rate of $400 per machine setup, resulting in $1.2 million of overhead assigned to phone systems based on the machine setup activity. We complete the same overhead assignment for the other 5 activities, and then we add the overhead costs for the 6 activities to determine the total overhead assigned to phone systems of $4.89 million. Next, we calculate the overhead cost per phone system by dividing the $4.89 million by the 50,000 phone systems that will be produced. The result is $97.80 of overhead cost per phone system. Take a moment to review these calculations to make sure you follow the numbers. And now we'll move on to the GPS systems. We follow the same procedure for GPS systems. For example, we multiply the activity rate of $400 per machine setup by 1,000 machine setups, resulting in $400,000 of overhead assigned to GPS systems based on the machine setup activity. We use the same overhead assignment for the other 5 activities, then add the amounts together to find that we have assigned a total of $5.11 million of overhead to GPS systems. Now we calculate the overhead cost per GPS system. We divide $5.11 million of overhead by 200,000 GPS systems to be produced. The result is $25.55 of overhead costs per system. We'll look at the whole picture next. In this worksheet, I've combined the data we looked at a moment ago so you can see the full picture. Notice the total estimated activity for every cost pool is divided up between the phone systems and the GPS systems. As we discussed, phone systems use 3,000 machine setups and GPS systems use only 1,000 machine setups for a total of 4,000 machine setups. We allocate the estimated overhead cost of $1.6 million for these machine setups based upon the activity used by each product. As a result, the phone systems receive 75%, that's 3 out of 4,000 setups. They receive 75% of the overhead cost for the machine setups, or $1.2 million. Now, this is a much fairer way to allocate overhead cost, right? More costs are assigned to the product that use more of the activity causing the cost to occur. Our total overhead cost of $10 million is fully allocated between the phones at $4.89 million and the GPS systems $5.11 million, based on how much activity of each type of overhead the product uses. This is one way to double-check your math when you do the ABC allocation. And finally, don't forget to calculate overhead cost per unit. For each product, all overhead is added up. Then the total cost is divided by the number of units produced. We do this for each product to get the overhead cost per unit. Phones cost $97.80 and GPS systems cost $25.55 in overhead under ABC. We'll see the next step is to add direct labor and direct material costs to determine total product costs for the company's products. The final step is to determine total product costs. Let's consider ABC, then we'll compare it to the traditional costing method. When we add direct material cost of $90 and direct labor cost of $20 to our ABC overhead cost per unit of $97.80, the total unit product cost of a phone system under ABC is $207.80. Likewise, when we add direct material cost of $50 and direct labor cost of $20 to our ABC overhead cost per unit of $25.55, the total unit product cost of a GPS system under ABC is $95.55. If we compare product costs using ABC to the traditional costing method using direct labor hours as a base, we see a shifting of costs between the products. More on that in a moment. For now, notice that assigning overhead using activity-based costing results in a decrease in the unit product cost of a GPS system from $110 to $95.55, and an increase in the unit cost of a phone system from $150 to $207.80. Direct material and direct labor costs under the two approaches are the same. The differences in the total unit product cost are a result of the two different approaches to assigning overhead cost. Specifically, the shifting of cost occurs because the ABC system assigns $14.45 less overhead than the traditional system does to each GPS system. That's $40 minus $25.55 is equal to $14.45. And the ABC system assigns $57.80 more overhead than their traditional system to each phone system. That's $97.80 minus $40 is the $57.80 difference. So this shift in costs will certainly influence how much COMCO bids to supply systems for its potential customers. But first, why do we see the shifting of cost? We discussed the reason briefly in the Part 1 video. In general, it occurs because of the existence of batch level and product level cost. Machine setup and production order cost are primary examples for COMCO. Do you recall that we sold 50,000 phone systems and 200,000 GPS systems? Phone systems are the low-volume product, and GPS systems are the high-volume product. Activity-based costing shifts costs from high-volume products produced in large batches, like the GPS systems, to low-volume products produced in small batches, such as the phone systems. The traditional costing method, based on direct labor hours, ignores the existence of batch and product level cost. It assigns the same amount of all overhead cost, including the cost related to production orders, to each phone or GPS systems, $40 per unit, regardless of how much resources each of these types of products consumes. The strength of ABC is that it helps companies identify inefficient processes and inaccurate costing and ultimately improves profitability. Fortunately for us, the use of activity-based costing systems doesn't change the entire accounting process. The flow of costs through raw materials, work in process, and other accounts is basically the same under activity-based costing as it is when using job order costing. The only difference is that ABC uses more than one predetermined overhead rate to apply cost to products. Finally, let's consider reporting implications. If ABC is used in external, that is, GAAP-based financial reports, product cost should include all manufacturing costs. This is consistent with what you've learned previously. In other words, selling and administrative costs should not be assigned to products. But if ABC is used only for internal decision-making purposes, then selling and administrative costs should be assigned to products where appropriate. However, facility-level costs should not be assigned to products because there is not a good way to correlate those costs with any product-related activity. This concludes our review of activity-based costing concepts. I hope you find it helpful. And as always, please let me know if you have any questions.